you're the person that these people should know.
Take a seat and quiet down there, Chris. So, all right, how many of you are founders? Chris and I were having this discussion before. How many of you are founders or senior execs at startups? And how many of you work at really, really, really big companies? All right, I think that answers our question.
All right.
Excellent.
Good.
So, so we should probably talk about. So most of you probably want to hear about mobile rather than venture funding. How many of you want to hear about mobile stuff? And how many of you want to hear about the venture funding climate? Oh, that looks pretty robust. So we can do both.
Okay.
Excellent.
That sounds good.
So let's start with some venture stuff.
Oh, sure.
Okay. Because you're here in New York, you're based in California, you make a lot of investments, and New York has gotten used to seeing VCs from the West Coast kind of traipse in every now and then. But you're a little different, and you've got like a real history in New York. You want to talk about how, as a West Coast-based VC, you think about approaching the New York market?
Sure. I mean, New York has been really good to us. We've gotten lucky a couple of times in New York with a company called Right Media back in 05 through 07, and then a company called 2U in the EDU space. And look, we think New York is probably the #2 venture market now in terms of attractiveness of startups. And it sounds kind of crazy, but it's a super easy plane ride where I get 6 hours to get a whole bunch of the work done on the plane while we get out here. It's super easy to address from California, and the reality is we now have a critical mass of talent, which was sort of the Achilles heel, I think, particularly on the engineering side in New York. But now Google has thousands of engineers here. We now have critical mass of engineers, and all the buyers, all the customers are here.
Right.
And so, ironically, it doesn't seem that far away, and we now have the two ingredients we need to build highly successful startups here.
So one of the interesting things for me to have this conversation with you is, you invested in Right Media. Right Media birthed a whole next wave of companies, including AppNexus, which is an iconic New York company at this point. I'm fortunate enough to have been an investor in the first 3 rounds. I think you invested in a whole bunch of offshoots of Right Media.
Yeah.
You still have close relationships. The chairman of Right Media is now the chairman of Yext, which is another iconic company that I also was fortunate enough to invest in. And I guess you have a built-in network here, which is a differentiator for Redpoint. But how is Redpoint seeing the opportunity differently? Because the market has clearly changed in the last 18 months in venture more broadly. In the summer, things always quiet in venture because, let's face it, you guys have each personally made shit tons of money, and you get kind of lazy in August. And the laziness starts a little bit in July.
I'm not going to France and drinking wine all summer like you, Ed.
And yet,
Ed's a big wine guy.
And yet you're out here and you're hustling, and you were annoying me during August. So stuff was going on. So when we come back from August, we're back. It's the fall. Are we doing deals? Are we seeing a high level of activity, or are things a little more sluggish and you've got a little more leverage?
Yeah. So I think if you guys remember back, January, February, we had the hiccup in the public markets, and this was after a run-up over the last 2 or 3 years of the most frenzied venture activity probably that we've seen. And so everybody sort of looked around and said, boy, did the music stop? Are we in for it? And then it didn't really happen. We had Brexit, we have sort of low interest rates, and so everybody's looking for growth. And the good news is technology is where, it's one of the few places of growth in the world right now. And and so the markets came back.
That's not true, though, because Donald Trump said he's going to bring all the manufacturing jobs back to. Oh no, sorry. Go ahead. Sorry.
That's a different interview. A different interview.
Next time.
So we saw the first quarter was really slow. Everybody sort of stopped. Entrepreneurs didn't want to pitch, right? And the investment community didn't quite know, whether we needed to hunker down or whether this was just a momentary correction. And since then, things have picked right back up. So the third quarter, or the second quarter and the third quarter were quite active. And I think what's changed is there's just a little bit of a hissing sound in terms of the air being let out slowly of a slightly overheated market over the last couple of years. The high-quality entrepreneurs that are doing interesting and compelling things, those deals are as competitive as they've ever been. And I'd say there's just a little bit more of a hint of show me rather than prove it to me.
Yeah.
A little bit more market validation. All of which I think is a really good thing.
So it's interesting that you say that it's those deals are as competitive as they've ever been. I would argue that those deals are less competitively sought after than they were in like 1999, and they are and the valuations aren't as crazy, and the valuations did not get nearly as low as they were in, say, December 2001.
We haven't seen anything like that.
We've actually traded in this narrow margin, and one of the things that I think has happened is January and Brexit gave us an opportunity for people to recalibrate valuation expectations. And when you said entrepreneurs didn't want to pitch, I think now they're coming back and they're saying, we're going to pitch, and maybe now things are a little more realistic on both sides.
On both sides, that's right. And the market's clearing. And now, I think we are going to see, and we have been seeing, some of these momentum growth companies, if they have to go back to market, they're still highly successful companies, but the absolute valuations that people would be willing to pay may be reduced. And so, you're seeing a little bit of indigestion at sort of the later stages of the market. But look, if something's worth, I hate to say it, but if it's worth $10 billion or if it's worth $7 billion, it's still a huge success, right? And so we tend to worry less about those types of adjustments.
Yeah, and I think we've seen the layer of super late stage money that isn't really indigenous tech money.
Right.
The Fidelities, the hedge funds pull out of the market a little bit, and so there's less competition to get into those deals, and the A round, B round is pretty static in terms of the competitive nature of that.
And we've had some liquidity. I mean, Twilio got out and it got public, and it didn't, fall from grace. And so now you're starting to see, Nutanix talking about going out. We're starting to see a little bit more flow. I think 2017 is going to be a pretty good year for IPOs, and so, I think that will give folks the liquidity and sort of the halo.
And that depends on the election.
Yeah. Again, different interview.
Oh.
Yeah.
Damn. Yeah. So now that we've talked a little bit about the venture markets, just enough to misinform people, let's talk about your misguided thesis in mobile, which is great because like LPs give your fund money to invest, and then you tell them you won't actually know whether we've done a good job for like 7 years.
Right.
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 So
we still don't know. No, look, mobile over the last couple of years has been, I think the collective view has been that it's a pretty tough place to start to build early stage companies. Distribution on mobile is really hard. You have, the App Store search. You have, hope and wish that Android and Apple feature you, or you've got Facebook, and those were really the only kind of two ways to grow. And you have to get folks to download your app and remember that they had it on your phone. And so distribution and engagement has over the last couple of years been really tough. Monetization has also been pretty hard. I mean, we've all kind of seen, as we went from the desktop web and conversion rates were fantastic. You migrate over to the mobile web world, and they fall off a cliff. And so people have kind of been wondering, gosh, can we build viable businesses here? And I think we're starting to see a number of trends from the underlying platform companies. iOS 10 is had a couple of different things that are really encouraging. Moving Apple Pay out of the app ecosystem and into the mobile web. I think we're going to see huge benefits for folks on the transaction side. I think opening up these messaging platforms. Apple just announced that they're opening up iMessage, and we've got a company called Tenor that saw a 20% leap in shares by leveraging that platform. We're starting to see these platforms open up in a way that'll create new distribution opportunities and increase monetization. And so we think that's really encouraging.
And are you, if you're building, so I teach venture capital in the MBA program at Columbia, where I've been teaching for.
You can't teach venture capital.
No, are you saying I can't or one can't?
No, one can't.
One can't.
Yeah.
So you've actually guest lectured at my class a couple of times, proving that one can't impart wisdom about venture capital. So
I don't even know what I'm doing. I mean, I've been here for 15 years.
So one of the questions that students have been asking me is, if you're doing a startup now that is consumer focused, do you even need to think about anything other than being mobile? So it's not just mobile first, it's mobile only. Like, do we even need a desktop strategy?
Yeah, I think it has to be mobile first. And I've been sort of, preaching over the last couple of years that mobile is the only thing that matters. And we've just seen the shift in traffic, and it's happened a whole lot faster in all of our consumer companies than we had ever thought. The desktop's not going away, and I don't think the web is going away. But if you're not, focused, first and foremost on mobile, we're just not looking, at those businesses. That's where the users are. That's where they're spent. All the ComScore stuff just came out. I mean, it has shifted so dramatically that if you're not starting on mobile, I think we're far less interested.
Okay, but you would never do anything crazy like look for a mortgage just on mobile, right?
No, but I mean, you have to.
Didn't you just invest in a mortgage company?
Yeah, but we're going to have web. You're going to have a web interface as well. But I think where the innovation is going to happen is where we can create, a differentiated. I mean, the web is highly competitive for mortgages, and nobody has touched mobile yet, and so that's where the distribution opportunities are, and I think over time the consumers will be.
So we've talked about, we've just mentioned 3 different sectors that are beleaguered, and we've mentioned them in passing, right? So there's a lot of crap being heaped on fintech, and you did this mortgage thing, and I actually do look at personal finance stuff on mobile all the time. And we mentioned your wildly successful investment in 2U, which IPO'd. That's EdTech, which is a sector where a lot of people have broken their axes trying to make money.
Yeah, my last project, which we haven't announced, is another marketplace EdTech company.
Do you want to announce it right here?
No.
You sure?
Yeah.
Okay.
Yeah, I'm not allowed to yet.
You're not allowed to.
Yeah.
So now you know
it's a whole stealth.
He's both trustworthy and obedient.
Yeah.
Yeah.
Exactly.
So,
just the type of board member you'd want to have.
Absolutely. Yeah. Or dog, trustworthy and obedient. Either way. And
VC,
is there a difference
VC
between
and dog?
board member and pet? Yeah.
Parody. Yeah, I think that's fair.
It can be fairly similar.
I think that's fair.
And we talked about Right Media a little, which is ad tech, which is like a horribly beleaguered sector. And yet, it sounds like you're making investments in all three of those sectors.
Yeah.
And Beeswax just raised a bunch of money, which
amazing
is
company.
A great
Ari's
company.
a fantastic.
I'm an investor in that company.
Fantastic entrepreneur. Look, these markets are cyclical. You know what I mean? They fall out of favor and then they come back, right? It's undeniable that the mortgage industry is huge.
Yep.
Okay, and lending, consumer lending broadly is huge, and these categories come in and out of favor. We're looking for just exceptional entrepreneurs that are disrupting these large markets, and we try not to time these things. And actually, if you're investing in categories that may be less in favor, you have less competition in terms of fighting for those very best companies. And so,
when you say less competition, I just want to be clear. You're interested in categories where the venture capital consensus is bad idea to invest in it.
We have made lots of money investing in counterintuitive markets like ad tech, where folks say, "Gosh, we've lost so much money there that you can't build a big company." And then AppLovin goes and gets sold for $1.5 billion last week. I mean, you have to look where is innovation occurring, right? And who's truly differentiating themselves. If you invest in a bad ad tech business, you're going to lose all your money. If you invest in the next generation, platform company like we think, Button has the potential to be, you'll do just fine.
So how many of you now want to pitch ad tech companies to Chris? Anybody? Just look at that, just one guy. It's like a one-to-one. You only do like 1 or 2 deals a year, right?
Yeah,
and
then we go to France together.
Yeah.
Yeah.
I'm up for it.
I'd love to.
All right.
Cool.
Well, is there a last word or question that you want to pose?
Are there any questions from the audience? Anything that's sort of burning that folks want to know about? Yeah. In what? In beauty. Is there less investment in?
There is less investment.
I'm not a beauty expert, as you can probably tell. Well, I think commerce businesses historically, e-commerce businesses historically have been, a very finite category. It's been very hard to build scalable models, but we've seen a few. What's the subscription business?
I'm an investor in counsels of Birchbox and BaubleBar and Keaton Row.
I mean,
and
a couple of the most innovative
e-commerce. So one of the interesting questions that I think people have been asking recently about e-commerce is e-commerce dead as a category for which venture capital funds have appetite? And then Jet, which is a company that a lot of VCs who didn't invest in Jet have said that they would have loved to have shorted, right? They would have loved to have bet against that company succeeding.
Or Dollar Shave Club.
And Dollar Shave Club is another one.
Yeah. And rumor has it the Honest Company and a handful of others. So again, a category that was hugely out of favor. The herd says, hey, we're not going to do e-commerce, and yet we see these great outcomes. So I think historically the challenge in e-commerce has been you have to give all of your margin to Google to be able to acquire the customers, and someone like Birchbox figures out a way to break that acquisition model and drive a truck through.
And I am going to give you one more answer because part of your question is actually a super important question, and I actually spent the day at the White House discussing this with their tech team yesterday. So 95+% of venture capital investors who make investment decisions are men. And as you can tell, I'm currently showing several different beauty products. How am I doing? Pretty good, right? So like mostly category, when BaubleBar, and I actually wrote a case study about this for Columbia and wrote about it on Wall Street Journal's Accelerators page. When BaubleBar went shopping for funding and they were selling jewelry, a lot of the men didn't understand the market dynamics, and in successive rounds, and the company now employs something like 250 people in New York, a lot of the men didn't understand the market dynamics, and the women said, skip the first 20 slides. I've been shopping the category for 15 years. I get it. That stuff, slide 27, is what's really cool. And they said, exactly. Now we can go on with the meeting. And so there is a little bit of that. There are some efforts being made to correct that, but diversity is a problem that the venture capital community needs to address. I know Chris has just done something that's helpful, and it's an issue that we both care about and have been talking about for
It's a really
quite
good
some
point.
time.
It's a really good point.
So.
Yeah. Yeah. No, we think it is.
Do you want to repeat the question? I'm not sure.
Sorry. Yeah. The question around chatbots and I think more broadly messaging as a platform, is this going to be a new distribution channel, right? And we think it is. Just the way, and we think voice is going to be really interesting. And I think what Amazon has done with Echo and Alexa is just fascinating as another interface to these applications and services. And so now, can you build a company that is just a chatbot selling beauty or what have you? I think probably not. I think it'll be but another important interface, and we've certainly seen it in Asia as a dominant interface for where folks are transacting. But we think messaging as a platform, and it's not just going to be Facebook. It's iMessage as well. It's all of the messaging platforms. That's where the users are, right? And I'm really encouraged. We're very excited about the potential for voice. NLP is there, and if you've played with Alexa and some of these other platforms, I think it's very fertile ground to build distribution.
All right, I think I saw another couple of hands. We'll do one last question. Go ahead.
Yeah, I mean, it's hard to predict, right? Because the underlying website providers have to integrate, right? But it's not going so well trying to get, if you're e-tailer number 50, getting your app on somebody's phone and then reminding somebody that you're on the phone and then transacting. It's just not. And so I think, the mid-tail and long-tail of commerce players are realizing we gotta figure out how to make the mobile web more performance, conversion rate performance better, and I think they're going to be really excited about solving the pain. Because if you think about it, what do? You go to the website, you go to the mobile website, you're like, oh, I like that one, and then you get stuck on that payment page. You're like, well, shoot, I'll just wait till I get to my desktop, and then I'll buy it. Well, now you just put your thumb on it and you're done. So we think it'll be highly attractive to the web e-commerce players.
And the last thing that I'll mention is for companies that are working on payments, for companies that are working on beauty. So I run something called First Growth, which is part of our Venture Crush programming. And companies like Venmo and Birchbox and Moda Operandi and BaubleBar and OpenFin and Skillshare and a whole bunch of others went through our program, and we're in the final week or so of accepting applications. So if you're interested, if you look at venturecrush.com, you can toggle over to First Growth.
Great program.
And thank you, Chris, and thanks.
Thank you, Ed.
Thanks, Button.